Welcome to the Daily Vibecasting.
We are diving deep into today's fire hose of X, pulling out the 12 most important posts that are driving the conversation.
That's right, we're covering everything from high-stakes AI market shocks and geopolitical philosophy, all the way to some, let's say, very frustrating moments in global logistics.
And our mission today is extraction and acceleration. We have a huge range of sources, and we need to distill those nuggets of insight, keep the analysis sharp, and give you the full context fast.
So you walk away truly informed. Let's start where the money is, with a challenge to some established financial wisdom.
Okay, let's do it.
Our first stop is with the high variance champion himself, Nassim Nicholas Taleb. The text is short, but the implication is, well, it's huge.
At 10 Celeb, new paper coming, link.
So Taleb is returning to a topic he first drafted, back in 1998?
Yeah, a long time ago. It's about the fundamental flaws of stop-loss trading strategies.
And for any traders listening who rely on those automated stops to manage risk, what is the core counterintuitive warning here?
The warning is that in real volatile markets, what Taleb always calls fat tail environments, these stop-loss strategies don't actually reduce your risk.
They do the opposite.
They amplify it. The traditional models, the Gaussian ones, they assume when the market hits your stop price, you just get out cleanly.
But reality is messy. A flash crash, a liquidity crisis.
Yeah.
It's not a graceful exit.
Precisely. When everyone is rushing for the door at once, liquidity just vanishes.
Yeah.
That stop-loss order you set, it becomes a market order that gets filled way, way below where you expected.
And that gap is the slippage.
That's the slippage. And that's what turns a small loss into a catastrophic one. It often makes the dynamic stop riskier than if you just held on and, weathered the storm.
It's a fundamental challenge to risk management best practices. Okay, speaking of challenging the status quo, let's move to a pretty fascinating pairing.
Right.
The big short contrarian, Michael Burry, paired with an AI momentum tracker.
At Burry Tracker, Michael Burry Stock Track. Link to thread.
The irony of using the Burry Tracker account to show off the Grok AI portfolio is just perfect. But let's set that aside. The numbers are demanding attention.
They really are. In less than 10 months, so since February 2025, the Grok AI-managed $10,000 portfolio is up 24%.
And you have to put that in context. What did the S&P do?
The S&P 500 gained 18% over the same period, so that's a 6-point alpha gain. Not bad.
Not bad at all. I mean, that suggests some real pattern detection, or maybe just a lucky run in a short window. What were the specific bets it made in December?
The portfolio shows some high conviction in growth tech. It put 8% into Amazon, citing e-commerce dominance.
Okay, makes sense.
7% in Vertiv, which is a huge player in data center infrastructure. And then, and this is the interesting part, 5% in Netflix.
Netflix. Why?
The model explicitly tied it to the hype and expected success of the upcoming Stranger Things Season 5.
So the AI is integrating both economic fundamentals and, cultural buzz into its strategy.
It seems so. It's speculating on pop culture.
Yeah. Amazing. Okay, so AI is beating the market. Now, speaking of AI resource demands, this next post shows how that demand is just warping the entire hardware supply chain.
At Pirate Nation. One of the big three RAM manufacturers, Micron, has announced they are exiting the consumer market completely. Link.
This is enormous news. I mean, for anyone who builds or upgrades PCs, crucial branded RAM and SSDs are. They're staples.
Yeah.
And they're officially ending production by February 2026.
It's a huge deal.
So why is Micron just abandoning this massive consumer segment?
It's all about profit margins. Consumer RAM is basically a distraction for them now compared to the desperate high-margin demand from the enterprise AI world.
So they're refocusing everything on AI data centers and something called HBM.
Yes. High bandwidth memory, HBM, is the key here.
So for anyone listening who needs the quick version, why is HBM such a game changer? Why is it causing this massive shift?
Okay, so HBM involves stacking memory layers vertically right on top of the processor. This slashes the distance signals have to travel.
Which means less latency, more throughput.
Exactly. It's absolutely essential for training the enormous, hungry AI models that NVIDIA, Google, and OpenAI are all building. The demand is so intense and the margins so high that Micron can just jettison the entire consumer market to feed that machine.
And the user reaction online wasn't just about, oh no, RAM prices are going to skyrocket. There was speculation this is part of a bigger push to force everyone into cloud computing.
Right. Take away the local processing power.
And that idea, the effort it takes to use current AI, ties perfectly into our next post from Dwarkesh Patel.
At Dwarkesh Patel. I totally buy that AI has made you more productive, and I buy that if other lawyers were more agentic, they could also get more productivity gains from AI. But I think you're making my point for me. The reason it takes lawyers all this schlep and agency to integrate these models, Link.
Let's define schlep here, because it's such a perfect word for this problem. Patel's arguing that these models, even though they're productive, they're not AGI.
Right. And the schlep is all that heavy human lifting. The custom prompt engineering, the detailed few-shot examples you need to fine-tune the model, the constant human oversight.
The babysitting.
It's all babysitting. And Patel's point is that the fact you need a highly agentic, a proactive, self-directed human lawyer to integrate the model proves that the model itself lacks agency.
So if it were true AGI, what would that look like in his view?
He argues it would just autonomously learn, it would dig into the company's Slack archives, its internal documents, and just start synthesizing solutions without needing a human chaperone to structure everything for it.
So the productivity gap isn't about adoption, it's a fundamental capability limit.
That's his argument. It reframes the whole debate.
And meanwhile, the biggest player in that whole agency battle is trying to look like a good global citizen.
At OpenAI. The OpenAI Foundation names the first People First AI Fund recipients, 208 community-based nonprofits receiving $40.05 in unrestricted grants. Link.
$40.5 million going to 208 U.S. nonprofits. It's for AI integration in areas like workforce development and rural health. A very public, very philanthropic move.
It is, but we have to put it in context. This announcement is coming right in the middle of some serious friction with their own user base.
You mean the hashtag Keep40 hashtag?
Yeah, that whole protest about the GPT-4o API deprecation and what users see as increased censorship. So when you look at the replies, you see a lot of people framing these grants as, a sophisticated deflection from very real user complaints.
A bit of PR management, maybe. Okay, speaking of high stakes and high friction, let's jump to the boldest prediction of the week from NVIDIA CEO Jensen Huang.
At Vigilant Fox. So. NVIDIA CEO blows Joe Rogan away with a staggering prediction about AI. Huang. In the future, maybe 2 or 3 years, 90% of the world's knowledge will likely be generated by AI. Rogan. That's crazy, Huang. I know, but it's just fine. Rogan. But it's just fine. Link.
90%. 90% of all new global knowledge data analysis, everything generated by AI, in 2 to 3 years. That is a jaw-dropping forecast.
It really is. It perfectly captures that intense technological optimism that's driving the market.
But that optimism is colliding with a pretty cold reality, right? The reliability
It's
issue.
a huge reality. We're seeing study after study suggesting that large language models hallucinate or just get things factually wrong somewhere between 15 and 30% of the time on complex tasks.
So if 9 out of every 10 things you read are AI-generated, that error rate becomes an existential problem for, how we even establish what's true.
Absolutely. The potential for informational pollution is just massive.
Okay, let's stick with the giants and look at a strategic analysis of the coming AI ad wars.
At Signal. One last thing on ads. If I'm Google, I wouldn't run a single ad on Gemini Core. I'd run it at a pure loss until every competitor is forced to slap ads everywhere just to keep the lights on. Can you imagine if Google is the ad-free experience? Google has the luxury of Link.
This is a brilliant take. The argument is that Google could basically starve its competitors into submission.
Exactly. They can run Gemini completely ad-free at a loss because they're still making money from the AI overviews integrated into their main search product.
So they're the well-fed predator, as the Post says.
Right. They don't need direct ads on Gemini. And this lets them put immense financial pressure on rivals like OpenAI, who are reportedly already testing ads.
Forcing them to clutter up their user experience just to survive. It's a resource war fought on the UI.
100%.
All right, let's shift gears. We're transitioning now to culture and the wider world, starting with some career advice from a Hollywood legend.
At Culture Crave. Leonardo DiCaprio's advice to younger actors: if you love being an actor, you have to realize that it's a marathon, it's not a sprint. And that's not to say, oh, these are all pivotal choices, don't try something commercial, don't do this too early. It's about the idea of Link.
The marathon philosophy. It feels like a direct response to the pressures of today's social media world, doesn't it?
Oh, completely. He's pushing back against that impulse to chase viral fame or a quick commercial hit. He's advising young actors to think about roles that build a lasting artistic impact.
Advice for longevity.
Yeah.
And he's sort of living it, right? He's promoting his new Paul Thomas Anderson film.
Right. One battle after another. It's a satire where he plays a bumbling Antifa radical. The message is pretty clear. Make choices for your 50-year career, not just the next 5 minutes.
From career longevity to geopolitical longevity, we have a massive abstract dilemma posed by Balaji Srinivasan.
Balaji.
Yeah.
If a country stays small to remain true to its roots, it eventually gets absorbed by an empire. Conversely, if a country plays for empire and truly achieves world domination, it absorbs so many that its subjects eventually outnumber the imperial core, and thus the empire, too, Link.
This is the famous empire binary. You either stay small and get conquered, like the Greek city-states being absorbed by Rome.
Or you grow so big trying to dominate that your founding culture just gets diluted into nothingness by all the people you've absorbed.
It's the classic geopolitical death trap. You see it with the Western Roman Empire's collapse.
Exactly. And Balaji uses this binary to frame why his network state concept is necessary. It's designed to escape both traps, physical conquest, and demographic dilution by existing digitally.
Maintaining its ideological purity through selective, borderless membership, trying to break that ancient physical trap.
That's the idea.
Okay, now, for a pointed domestic political critique about media coverage, or lack thereof, from legal analyst Jonathan Turley.
At Jonathan Turley, an alleged fraud of funds exceeding $1 billion was taken from poor families, children, and the disabled as the government ignored warnings for years. So what is missing to make this news? Apparently a Republican link.
So Turley is specifically calling out the major networks here regarding the Feeding Our Future scandal in Minnesota.
Right, and we should be very clear here. We are just conveying the argument being presented in this post.
Absolutely. The scheme involved over $250 million allegedly stolen from child nutrition programs under Governor Tim Walz's administration.
And the critique Turley is making is focused on media bias. He's saying that while some outlets like Fox News and the New York Times did report on it, his analysis found that ABC, NBC, and CBS evening broadcasts basically omitted the story that week.
Which leads him to raise questions about whether the party affiliation of the state leaders involved influenced that level of national network coverage.
That is the core of his argument.
Okay, let's pivot to a story of friction that's maybe less politically charged, but just as frustrating for the people involved. The absurdity of import fees in Nigeria.
At the Lawrence alibi, wet and concern NDLEA and iPhone 17 Pro Max e-patir.
This satire is aimed squarely at the overreach of Nigeria's National Drug Law Enforcement Agency and Customs. They're routinely scrutinizing things like iPhones.
It just perfectly captures this deep systemic hurdle for businesses and consumers. I mean, the thread had this shocking anecdote, a $200 shipment.
And the fees ballooned to what?
600,000 NGN, the fees. But because of high duties, VAT, and then officials claiming it was undervalued, the fees ended up being a 300% markup just to get it through the port.
It's just bureaucratic chaos and arbitrary costs.
Total chaos.
And finally, let's wrap up with another great example of physical borders overriding common sense. This one from Levels.
At Levelcio. Shech, DHL China delivery guy, came by to ship the Japanese kitchen knife to Europe and rejected it as he said it would get confiscated by Chinese customs even going outside of China. We had help from the Chinese hotel staff, and it was impossible. So the last thing we'll try is Flying Link.
The great kitchen knife dilemma. He was just trying to ship a high-quality chef's knife from China to Europe with DHL, and they just said no. Flat out.
The sticking point is a very specific Chinese customs law. It prohibits the export of any blade over 15 centimeters.
Even if you're shipping it out of the country.
Even then. And the enforcement seems really inconsistent because he noted the knife had no problem on a domestic flight in his checked luggage, but international shipping. Too risky for the carrier.
It probably goes back to heightened security concerns, like from the 2014 Kunming railway attack.
That's the context, yeah. It's a perfect little microcosm of bureaucracy choking logistics. The only workaround people suggested was to lie on the customs form and call it gardening tools or something.
What a sweep of the feed today. We saw AI acceleration Grok beating the S&P, Jensen Huang's staggering prediction just running headlong into structured human friction.
Yeah, whether it's the schlep you need to make AI actually productive, that ancient trap of empire, or the pure bureaucratic headache of shipping a knife across a border.
And the threads really do connect the high level and the mundane.
Oh, yeah.
We also saw that every technological leap, especially with AI, creates new vulnerabilities.
It does. Whether that's the risk amplification Taleb warns about in markets or the epistemic risk when 90% of our information is machine generated.
So what does this all mean for you? Let's go back to that Micron story. They are abandoning the entire consumer market to focus on high-margin, specialized AI enterprise demand.
Right, for HBM.
So if the most powerful, most specialized technology is continuously priced out of reach of the general user, pushed solely toward massive data centers and three-letter organizations, what does that concentration of computing power mean for who actually gets to control the future of information and innovation?
Something for you to consider until our next deep dive.